Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is the Memorial Day weekend edition. My name is Ben Maldonado. As always, I'm here with Barry Hederachi. How are you, Barry?
Doing pretty well. Thanks.
Enjoying the holiday weekend?
Trying to, as soon as we get this done.
Yeah, exactly. Today's show is interesting because we're gonna, in addition to covering the big five, which we do every week, which include S&P, bonds, crude, gold, and the dollar. We're going to hit on several commodities: gold, silver, copper, the metals, crude oil, sugar, and coffee. So before we jump into it, let's always start off with our little friend here, Bitcoin. And the interesting thing this week that I noticed is, the markets rallied really strongly. All the risk markets had a big week, and Bitcoin didn't participate.
Yeah.
Not at all. That is not a good sign for Bitcoin. We were talking about the fact that, as long as we were under this, 33.5 area, it's going to be weak. And, last week was just a real disappointment for the bulls. Anything else you have to add? That just to me is a red flag.
It's a red flag, and it looks like that triangle's working itself out to the downside. So we just, as long as it's below that little trend line, it's certainly weaker, and looks like it's just going to resolve to the downside. We'll have to wait and see.
Yeah, we'll see. It would be, if I was long Bitcoin, I would be disappointed that it didn't participate. That would be a real tell to say, hey, you got to watch out. Something's going on here.
Yeah, that is yeah.
Anyway, let's jump into the big five. A lot happened this week. Let's see what the story is telling us for this week. There's the E-mini. Boy, talk about level to level, Barry. Nice work.
Hey, thanks, Ben.
38.50, right to the high. They closed right on your 41.70 number.
Well, once in a while you get lucky on these.
Yeah. You seem to get lucky every week, though. That bothers me.
Yeah, this worked out pretty well.
That's very good.
And it's funny that we ignored sort of 40.75 because we just tapped it, intraday and recovered very quickly.
I mean, it's classic bear market short squeeze, isn't it?
Oh, yes. Yeah, definitely. Now, the work is never done, eh? So
right.
Let's map these up for next week. Well, last week, just to catch up, we wanted, before that, we wanted any kind of early on after this low came in, we wanted to see any pullback holding above 38.50. And after that, we wanted to see it hold 39.45, which we did. And after that, it was a clear shot into 41.70 area, and we got pretty close to it. All right. So next week, we're going to, this 41.70 is a sort of a key level, and not just from the built-in sort of structural resistance, but it's there from a number of different levels. But the power, the strength that was at the low, I know we had geometry and we showed that, the fork that we had on the daily and
we had the ABC and we had some squares. I mean, it was
exactly.
Decent stuff came in.
Yeah, a lot of little things, not any one big significant thing. So it looks like, it's a sort of temporary low that we can expect a little bit of a rally. And also, we were 48 degrees down from this high. And from the high, we were 144, and the 48 and the 144, it's a 1/3 of the square. So there's a harmonic playing out there. So, there's enough there to respect that low. So going into next week, I think, let's see, 42.75 is a number that we've been looking at. And I think 42.75 might be just fine. But just to adjust it a bit, I think let's look at 42.60 to 42.75 area to be the next level of resistance. And the key, obviously, is to be able to see if we can get up, and it's a short week, so see if we can get above this 41.70, Tuesday, Wednesday. And if we can do that, by the end of the week, we should, well, the way we're trading, maybe by Thursday.
Right.
So we should go up and test this 42.60 to 70 area up here. Now, failing to clear 41.70, I would, in order to clear that, I would say we really need to hold above any kind of a consolidation or pullback needs to hold above, let's say 4,100, just to be fair, which is at the top of that little box we've had drawn up a while back. So 4,100 to 4,125, let's say, give it a couple of points there. So any kind of a pullback here, if we can hold in the middle or as long as we're above that, it doesn't mean it has to come and tap it. It just means as long as we're above that and the market turns up and we take this out, if we can hold above that and turn up on lower time frames, it would show us that it's in a strong position. So that's the key here, the 41 to 41.25. Holding above that would tell us, the market's in good shape and able to, have some mileage left on it. And taking out 41.70 will sort of open up the next 100 points. That's short and sweet, but is that clear enough?
Yeah. No, it makes sense. The other thing, because the move was straight up and we were up 6% last week, chopping around, up, down, going nowhere in this, 4,100 to 4,170 area would not be out of the question either.
Exactly. Yeah.
Just burn off some time.
And the 90-degree line is also right in there, right on. It's a little bit below 41, like say 40.75. But if it's strong, it should really hold above 4,100. The strength that is showing, right? Unless it sort of all of a sudden deflates. That's why we want to watch that to see how strong it is. And
absolutely. The next pullback is going to tell us a lot about what's going on.
Exactly. And this 41.70 is no pushover, right? That's 45 degrees up is half the square. And so the key there is, are we able to clear that or sort of consolidate next week or just get hammered?
Right.
We'll watch that. Those are the two levels to watch. Moving on to the weekly.
That's a key spot too. Look at that.
It's a key spot. This 41.50 area is right there, right at that square. We pushed through it pretty well, Like I said, this is a weekly, we can go off a little bit, but that's the key line to watch, which is around 41.50. And like I said, if the lower time frame, like daily can hold above that 41.25, I think we could, push higher and sort of settle above this 216 degrees up, which is it's an important level. It's also the full, this structural sort of the measured move box that we drew out. So we're kind of at the bottom of that also. So we're, we got some headwinds here. It's not like the reason we cruised up here was it was easy.
Yeah.
Yep. Now we're coming into this bottom of this box, which is also going to provide some natural resistance. So it's going to build up.
Where's your quarter square there?
Quarter square would be, it's way up there. It's 44.
Yeah, if we settle on top of that full square, that becomes the magnet for price, so to speak.
On a weekly basis, yeah.
Yeah.
Boy, yeah. Well, let's see.
Let's see.
200 points at a time.
That's right. Let's
do 42.60 and see how we can manage that. Yeah. Otherwise, it'll be up here. Well, that would be nice.
It'd be a really good setup.
Yeah. All right. So that's that. Let's go on to bonds. Bonds a little bit easier. We marked off a low off coming off the high in March of 2020. And we pretty much came down into the ABCD at that low. At the time, we dropped this box to say that's the sort of the support area, and we need to market needs to hold above that, which it has. And if it does that, then we should probably at a minimum go up and close the, finish up the ABCD leg to the upside at around 144. And the fact that we should, sort of hold about 140, which is the upper boundary of that box. And we've done all that mechanically. It's all very, very good. And so we're looking for it to test the 144 area. That would be major resistance from a number of different ways. So that's a number to watch for bonds, and probably to maybe peel off some of that if you guys are long from down in this area.
Interesting thing too is it's not moving with speed, but it's grinding.
Yeah.
Which always tells me it's more corrective and it's more sort of consolidating as opposed to we're starting a brand new bull market. We'll look at how this thing's moving. It's not like screaming out of this low.
No, and it's rare that the bonds scream, but definitely not screaming here.
Right.
It's more like getting dragged up, right?
Yeah, it's counter trend, typical counter trend.
And here's our weekly bonds. So 141 was sort of the weekly level I had that we need to sort of get above and stay above for a longer weekly move. If we can manage to hang above that, around 150 is the next stop.
Mm-hmm.
So we'll have to watch that and see how that plays out. For now, you can see we had, 3 weeks up, and that's kind of normally has been the counter trend on these down legs. We'd had 3 weeks up and then something, 3 weeks up and then something. So possible that we consolidate or pull a counter trend here. So 141 would be the sort of the balance point on a weekly basis. We'll watch what happens. The key for now is to watch the daily because we have a much better handle on price levels here and the targets. Next one would be crude. And here, we got above 90 and held above. That was the main test the last few weeks. And we were able to do that, a little sloppy, but that's all right, given the situation, right? What's happening.
Man, it just looks like it's ready to explode, doesn't it?
Yeah, it does. It's where I'd say, yeah.
It takes a lot for you to say that about a chart.
But it looks good. Let's do the
weekly.
The weekly, which is looking even better.
Yeah.
Weekly, we've been going back to the low in 2020.
$6, man. Can you believe that?
If we only knew about holding.
Right.
What to do. All right. So 90 was a key level. Well, you can see we've been talking about this every week, and you can see how we held above that nicely, came back down, tested it. Now we're moving higher. Well, long as they're trending, leave them alone. Looks good. Trade the long side.
No question.
I don't see anything else to add. Next one would be gold. We talked about gold coming down into the 72 square, and down in here we talked about how it's probably a good deal and a place to add, and it worked out. Key level to watch was this 1832 to see if we can hold above that. And you can see, maybe I should zoom in a little bit. You can see we, last week we pulled back a couple of days counter trend, and we held above this 1832. So that looks good. But we're not out of the sort of shadows yet. So we need to go up and test this 1887 would be the next area to test. Looking at the weekly gold, well, we had this trend line drawn in, and it looks kind of coming out of nowhere, but we've had that in there for months.
Solid.
It was solid. I can't remember how I set that.
Right. But
I was looking at the other day again. But sometimes you're doing the work and you're in the work and you draw the line to leave them, and I forget to label it,
and then months later, there it is.
Months later, it came and held, and of course that low was the 72 degrees down, so everything worked out. So we're pulling out higher. 80 area is the sort of key level to overcome, which we might do in a hurry. So that's usually how it happens. Like when it happened here, it was like 1 week, it was all done. But that's a week. But that's those are the levels. We talk about bond market moving sort of sloppily. So this is also a sloppy kind of a up move. But the strength is there. The way you sort of measure the strength of a move is to look at the counter trends. And you can see here, 1 day counter trend, 2 bar counter trend. So, we're not talking a 5 day counter trend. So it's fairly, it's strong. It's not weak. It has some built-in strength there. Next one would be the dollar. Well, let's go look at the weekly first, because that's where we talked about. So last week we left off the dollar. I pointed out this, we ran up into this 270 degree square. It's 3 squares up on the 90 degrees.
Nice hit.
It was a very good hit. And although we're bullish the dollar, that was a caution, sort of a cautious flag, right?
Kind of looking like a false break, isn't it?
It looks definitely like a false break. And so now the key is to see how far the counter trend can go. And for that, let's jump on to the daily. And, if the dollar is really going to go higher, we need to hold above this 90 square, which is, let's just say 101. That's the level we've been playing with. So I would say it'll have to hold above 101, 101.64, or should I say, maybe 100 and a half.
Mm-hmm.
Right? It's a little give or take. Let's say 100,
Mm-hmm.
give or take 50 cents or something. But the idea is, when we look at prices, I don't normally take it down to the decimal. I look at the square level, because these are patterns and they're not always to the tick. Sometimes they are. So in a larger pattern, I'm looking for it to hold above 90. And if we can do that, then there's more upside. So the key level is that to watch. So 100, 101, that area. The whole time I was talking about a sort of a blow off, or it looks like it's going to blow off.
Mm-hmm.
And, we didn't quite get to 90, but that's pretty damn close. We're off by like 4 days. So it's possible we had something there. But I was looking at the weekly. Now we did have this, and we did have some timing there, but they're big squares. So we don't have time to get into all of that. But if you look from the beginning of the leg, we're pretty close to, the half mark is right there.
Yep, that's a 45.
That's 45. And, we're within 45, 48, but, 49 with, Gann's depth zone.
Mm-hmm.
So we're within that time. And, and we did 49 weeks up into that high. It's something to notice for sure, and not be all out bullish with blinders on, right?
Yeah, and that
you can see that's a
90.
one.
Yeah.
We had the let's say 45 to 49. We also did 120 up, which is a square and a half, square and 1/3 on the 90.
Mm-hmm.
But there is some timing there to be alert. We need to be alert to that. But generally, okay, that's fine. I'm not sure if that's the end of the dollar move. The way we will know is to judge it by the counter trend. So we have 2 weeks down, and of course we've had 2-3 weeks down before. So we'll have to watch that level on the daily to sort of isolate to see. So the key level is this 101, 100.5, that level to watch. All right, moving on to the euro. The key level resistance was this 105 we've been talking about for a while. And you can see how price held below that. And last week we managed to pop above it. So the 105 is support. And the next resistance level will be 108. It's the green line here. We'll see how that works out. I'm not convinced this is a sort of low for the euro yet. So, but we do have some upside into 108 area level to watch. And moving on to the weekly euro, we did have that 72 weeks down, and we talked about it last couple of weeks, and we talked about these lows here. Remember?
Mm-hmm.
I said, there's no way we're going to get a double bottom, and of course, what do we get? A double bottom.
For now,
it's hilarious, yeah. So, and we were talking about it during the week, right?
Right.
The market, like my basic line is double bottoms don't work, but once in a while they do. So hey,
right.
The other thing is that from the high, we were looking at the dollar from that big low, and if you look at the euro, 288 degrees is 2 squares of 144 was that low in 2016. We tapped that a couple of times, and that's where we came in. So that's clearly a band in some kind of a central bank, right? So now the key is, like, if that goes, that's when we get to, we were laughing about parity last time. So it's really this 288 that has to give out, and you can see why. We have all this support, and I'm still betting that this double bottom is probably not going to hold. So but we'll wait and see. I'm not in any hurry. So on weekly basis, there's 72. So the next, resistance will be at the square, let's say 109 on a weekly basis, which means that daily could push through a little bit, right? Like we did here. So anyway, 108, 109 would be the big resistance level for the euro. So 108 here, so 109 would be just a little higher. So maybe drop a little box in there. Eh? That might start out like that. Yeah, that's sort of the resistance area. Well, that's all I got. Put it back to you. Let's cover we got the Express Memorial Day weekend show. So
All right.
get it done and get through the commodities and the NASDAQ.
Okay.
And there's the NASDAQ moving back up to the square.
There we go. Right.
Mm-hmm.
There's some interesting time relationships I want to go over. One quick thing also, if you enjoy the videos, please give us a like, share, hit the bell, subscribe, to the channel, because that gives us really valuable feedback and encourages us to do more of these things. So we'd appreciate it if you guys do that, if you enjoy the videos and the content. NQ's the interesting thing, Barry, I was looking at when I was doing the review. Last week we went over the timing that did a great job at catching the low here.
Mm-hmm.
And so I said, let's look at the counter trends that we've had on the way down. This is sort of the regime changed here. So let's see what kind of rhythm the market is operating on now. And then gives us an idea. If we match these time counts up with some cycles, we might get a decent area and in terms of the timing for when this counter trend might be over. Right. If you look here, we've seen a 5-day counter trend, 7-day counter trend, a 5-day counter trend, then a 10-day counter trend. And this whole counter trend was 23 days. So I said, let's look at where we are now. Well, right now, we've done 5 days. 7 days puts us out on Tuesday. And if we look at a bigger picture, where we actually, pull back, go up, pull back, and then make a higher high, it possibly takes us out to June 22nd. Mm-hmm. We have some timing, June 23rd. The solstice is in there on the 22nd. So that really caught my attention. This is an interesting potential time for this rally to end. I don't think it goes straight up for 23 days. I think, if we're doing a bigger counter trend, we'll get some sort of pullback and then another push higher. So it's something to watch. We did break the steep downtrend line, so we can say this down move here in terms of the velocity of that move is over. The next key spot, I think, is this full square, and that's in the call it 12,750, 12,800 area. If we get above that and can sit on top of that, then we open up this square here.
Also, we broke that big trend line. That's definitely to be noted.
Absolutely. Very, very important that we broke that. So any pullbacks, we'd like to see hold above the half square, here in the, call it, 12,100, 12,200 range. We hold that area, then it's, gives us, more confidence that they're going to be another push higher. So you got the levels, which are on the spreadsheet. We post a link to the spreadsheet with all the levels. The levels are there. We got some timing to think about. I think this late June area is really interesting to me because of the cycles and the time counts. ES produces the same things too. So keep that last week of June in mind from a timing standpoint. Anything else to add here on NQs?
No, we're good.
Okay. Let's start covering the commodities. Start off with gold. Barrie did a great coverage of gold. I will just add my thoughts here. We mentioned gold last week was looking good. Had a decent week in gold, small little pullback, and we reversed right up, essentially after just 2 days on a pullback. The next big battle is, for me, on the half square, will be in this 1880 area. We clear 1880, we open up, 1970, 1975. So it looks good. Gold looks good. I love the series of higher lows that we're beginning to see, going back all the way to last August, almost a year. Now it's just a matter of time of when can we get that launch, and obviously we'll get the previews when we start breaking these squares and holding them. Breaking this square and holding it. But gold looks good, looks bullish. Let's take a look at silver. Mm-hmm. Silver's a little behind gold, but I think it's kind of creepy crawling its way up. The next big spot to watch the battle is in this 2265 area. We get above and stay on top of that. we open up the half square, which is at, call it 24.55. So we're just going to look at taking it level by level. This next one is the key one. My gut tells me that this was a washout move, right? Clearing out the stops here.
Mm-hmm. Yeah.
The double bottom from last fall. And if we go back further, there's even more price action in there. So this may have been the clear out before they make the big move higher. And I do think, silver is set to go higher. First test that we got to pass, though, is this 22.65. We can get above 22.65, probabilities, increase that we're going to go up. Anything else you have to add on silver?
No, that's good cover. I think that full square is the one to watch for now. So we'll see.
Yeah, and the next chart is a good example of what we're talking about, how you got to clear a level. And it's copper. Copper we talked about in here last week. I think we were right in here. That this huge expanding triangle that's been playing out, and the sort of false break here on this half square and the lows here, that we looked like, oh, maybe we're going to take a move and go back up and hit, if we're stuck in this range, we're going to hit the top of this expanding triangle. But the key caveat was we got to get over this full square, right? And the full squares, call it the 433 level. Well, we came up, tested it for a few days, pushed back hard on it. And then on Friday, reversed pretty hard off that move coming into this 433. This week, I think we're going to have a real definitive price action. Either we're going to fail here and go down, and then any bullish thoughts are done, or we're going to push through and sit on top, and then we can know, hey, we're ready for this run up in copper. So the price action this week around 433 is really, really important, because it's going to dictate whether there's more work to do on the downside, or there's possibility for a nice sort of fast move higher up to these much higher levels, $485. But this is a great example of why these squares are valuable. Is you want to see what happens when we get there, because it's a decision point, and it looks like the decision point's going to be made this week. We failed there, pulled back, now we're approaching it again. The setup is for it to fail again, right? Usually you come back into it and then fail and you fall. So we got to watch that. But if we break through and sit on top, it becomes very bullish. What are your thoughts here and looking at this copper chart?
Well, I think it is a critical spot. It's possible that we consolidate, below the square, especially if we're getting into this sort of deflationary cycle. Mm-hmm. So this might be a good indicator of that. If we can clear the square and get above, setting up a leg up, or if we're going to spend more time below the square, consolidating and sort of waiting.
Yeah, it's a very key week, and a key level on copper. So let's see how that plays out. We don't need to do predicting. We can just watch the price action and then use the probabilities in our favor.
Yep.
Here's crude. Barrie talked about it. I just wanted to show a couple things. One, we're holding this this very steep trend line coming off the December lows, which, believe it or not, price was like $63 in December. Crazy, huh?
Yeah. Mm-hmm.
What a move. And the other thing is,
and we called it.
Yes, we did. The other thing here is this 115 level, call it 115.60, 115.50, is really key. As you can see, we banged our head up against it, 3 different times now since this big pullback off the high. It's going to break through. When it breaks through, we look to see, can it sit on top? And when it does, man, that's when this thing could really get legs. So the persistent bid continues, which you can see in the form of these higher lows and higher highs. To me, it's just right now, probabilities favor that it's just a matter of time when this thing breaks out. And we'll see if it happens this week, next week, the following week. But it seems to be coming. The other thing, notice on this sort of bear raid they made the last time, they couldn't even get a close below that full square in the 104, 105 area. So it's bullish. And it concurs with with your chart review. I just wanted to show those few points there.
Mhm.
So crude continues to look good. Here's sugar. Sugar's winding up in a triangle here, but again, the turn that I'm beginning to see is this this series of higher lows, and the curl that we get on the chart went right before it moves. This consolidation has been going on for 10 months now, and to me, whether we come down and have to test this the bottom of the triangle and the full square again, or whether we move and break right out, sugar to me looks to be winding up for a really, really big move out of this almost year-long base. Key levels here to look at on the upside, it's clearing that 2050. The battle right now is at 1950. If it wants to keep pulling back, then the key level on the downside is 1850. So I do believe sugar is set up to move higher. And when we looked at the monthlies, on the monthly show, you can see that this is one of the commodities that's not super extended, has been building a base for a year, and we're getting close to the terminal point of this consolidation, and the next fast move higher should start soon. I know you've been all over the sugar chart as well, Barrie. Anything to add? Any different takes on this?
No, that's your take is fine. It's just a matter of waiting for the timing. When you see a good opportunity, you can take a shot. Probabilities are to the upside. So, but it's not, in a full blown trend yet. But you can see it's starting to build. After the lows, early part of the year. So we're starting to sort of balance to the upside, especially because we cleared that square, right? We have that square below us, and we managed to stay above that for the whole year so far. So that tells me, well, it's pushes to the upside. So it's just a matter of waiting for the break.
That's exactly right. And you know me, I always like to try and find it as early as possible, and that's what this thing is sort of signaling.
That. I remember nat gas and wheat,
yep.
And all of those.
Yep. I look for that pattern, and then it's a matter of being patient till that move comes. You're great at getting in once the move starts. I got to get in before. It's just it's my nature.
Yeah, we go through that.
Yep, we do it all the time. Another one that looks pretty good is coffee. Not a dissimilar setup. We've had a pretty decent base here, not as big as the sugar base, but multi-month sort of consolidation and correction off of this high. The high was in February, but notice this support here, right? This 212 level we've been talking about. It was an area of previous highs. We came down, tested it. And this little move always interests me, because there's your false break, right? Clean out all the stops. Anybody who bought, against this or bought against this got wiped out here, and then they reverse it right away. And in the commodities, as well as other markets, but especially the commodities, before they make a big move, they almost always come down and do one of these false breaks and clean out some lows and some stops. And if you go back and you look at the charts, you can see that's kind of a classic move in commodities. So late last week, we had this nice, powerful move, sort of 3 days in a row, 3 up days in a row. We took out the downtrend line, and now we're going to go up here, and we're going to start challenging this half square, call it 231, 232 area. I think coffee, I don't know what's going on in the fundamentals of the coffee market, but the price action here is saying that something's coming in terms of a restriction in supply, where coffee prices are going to move up. I especially like the move on Thursday and Friday, man. Look at both of those bars. We closed at the high both days.
Yeah, and that low on Tuesday is a good example of holding above. Like came back to test the square and reversed.
Yep, right there.
Mm-hmm.
Yeah, that is a really good point, Barry. That's what we always talk about. You get above and then stay above, and that's considered staying above and a successful capture of that square. And so once it captures that square, you say, okay, the half is the next, and then we have to see, can we get above here and stay above the half? Then we're looking at the full square, in the 250 area. So that's how you can use these things level to level, in addition to sort of, the bigger picture that we try and present with the monthlies. But coffee looks good. The action the last 2 days of the week was really, really bullish, and I'm curious to see if we get some follow through here in the beginning of this week. And that's all I got in commodity land. The rest, the grains, the other softs, nat gas, they're all in, major bullish trends on a bigger picture, sort of monthly, yearly, quarterly type thing. But on the daily 4-hour basis that we try to focus on this show, they're either correcting or they're consolidating or they're sort of digesting a previous bullish move that they made. So the idea is try and capture the moves coming in the markets that we highlight, and pay attention to the levels. So anything you're watching, focusing on this week specifically, Barry?
Well, the S&P, same old, same number, the big five,
Right?
But mostly most of the S&P.
Right.
And
you want to see the character of this pullback if we get it.
And of course, crude, looking for, see if we can get a break. We are slowly breaking out, see if we have a continuation out of that. And also watch gold, see what the market price action is, see if it's going to give us some kind of an opening here.
Terrific. Well, everybody, listen, have a great Memorial Day weekend holiday and a good week trading. Barry, same to you, and good job on the show.
Thanks, Ben. Have a good week, everybody.
All right. Take care.
Bye-bye.